With the Bitcoin halving coming up and March Madness right around the corner,
looking for help, drops it to Mbag. 3, 2, dropped off to Nolan, and the winner at the buzzer! The Bulldogs winner at the buzzer, they will review!
Bitcoin may be as crazy this week as it has been the last couple weeks. Maybe not. With Bitcoin consolidating just underneath of all-time highs today, we have a great opportunity to zoom out and look at the macro landscape. A lot of times we have a narrow focus in the Bitcoin industry, and sometimes we need to take a step back and realize that Bitcoin is just a part of a larger macro economy. What's up, everybody, and welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. One thing that we will be doing this week is we're going to take some time to answer our viewers' questions directly on the show that we get at daily@swanbitcoin.com. So if you have burning questions that you want answered, like what's the difference between holding MicroStrategy stock versus a spot Bitcoin ETF versus real Bitcoin, or how do I custody my Bitcoin and take self-custody seriously? These are all things that we want to try to answer. So please send us an email, daily@swanbitcoin.com, if you have those burning questions. And with that, we're getting into our show. This week is shaping up to be a blockbuster in the macroeconomy because of several major events happening this week. Firstly, Japan is set to be the last country in the world to have negative interest rates. Japan has had negative interest rates for 8 straight years, making that the longest stretch of time that any country has done that in the history of mankind. The Bank of Japan is between a rock and a hard place because it has a terribly slow economy. It has massive demographic challenges with an aging population, and now it has a new threat on the horizon, sticky inflation, with wage increases like they haven't seen in the last 33 years. On Friday, Japan's trade union negotiated wage increases with most of the largest employers in the country to the tune of an average of 5.28%. What happens when you increase wages? Well, inflation becomes harder to manage. So you have this economic backdrop where you have this slow economy that needs low interest rates in order to have real growth. And now you have sticky inflation. That's the rock and a hard place the Bank of Japan is between. Oh, and not to mention, their stock market is soaring right now because their yen is weakening. In other massive news, just a day later, the Fed will have its FOMC meeting on Wednesday at 2 p.m., where everyone is eagerly awaiting any indication that Jerome Powell will or will not cut rates in June. Like Japan, the U.S. economy is in a weird place. Inflation continues and remains to be sticky above 3%, as core CPI came in higher than expected last week. And economic growth seems to be much slower than what the media is telling us. Jobs appear to be strong. Unemployment appears to be strong. Spending appears to be strong. But when you actually look underneath of the hood, that's not what the real economy is telling us. Banks are lending less. Consumers are spending via credit cards with money that they don't have. Auto delinquencies are rising. And bankruptcies are through the roof. The term soft landing is thrown out a lot, where the Fed believes that it can tighten rates, tame a strong economy, while also stimulating growth without having a recession. Over the last 43 years, that soft landing has happened only one time. And this similar story seems to be playing out in economies all around the world. You have sticky inflation, slow economy growth, and high debt to GDP rates everywhere. But the issue is, if central bankers cut rates, well, then the problem of inflation doesn't just become a one-time thing, it becomes a runaway thing. And that's what they're looking to avoid here in the US. Australia, Brazil, Taiwan, Norway, Mexico, and Switzerland all have rate decisions this week. I'll be interested to see what central bankers have to say about how their economy is actually doing and whether they can cut rates because inflation is or is not sticky. If Canada is any indication, it appears that economies all over the globe are suffering as bankruptcies are rising everywhere. What I'm not saying is that I believe that there will be major changes to rates this week. But what I am saying is that they are unable to make changes because of the situations that economies are in. Realistically, the only way for economies to be stimulated is through more and more fiscal deficits, or in plain language, governments creating money or spending money in excess of what they take in. In full year 2025, the U.S. government will see over $2 trillion in deficits. I love this chart from the Bitcoin layer, showing the U.S. fiscal deficits on a log scale and just how wildly up and to the right that this chart is. Typically, when governments print money in order to create this debt, there is a buyer of this debt on the other side. But as we probably will see with a 20-year bond auction and a 10-year tip auction from the US, there's decreasing trust in the US government debt and government to government trust everywhere in the globe. Consumers are losing trust in their governments. Governments are losing trust in other governments. So what are we going to turn to? I think I have an asset that you might be interested in. Bitcoin. It represents an exit for people globally. Bitcoin analyst Dylan LeClaire puts this well on Darius Dale's 42 Macro Show earlier this morning.
The US is the best currency out of all fiats, but it's still going to devalue against everything you want to buy and own, right? It's an absolute certainty that perpetual credit expansion will exist and continue forever by definition of this system. They actually can't rewind it. They can't taper this off. So in that world, what do you do? And that's up to everyone. I mean, you can buy equity indices. You can try to get high yield bonds and hope that you're an astute credit investor. You can maybe buy commercial real estate or residential real estate and try to short the dollar. You can buy gold, and it'll maintain its purchasing power. But I mean, for me, it's Bitcoin. I've put all of my money in wealth into Bitcoin for 5 years going straight, and I've eaten 80% drawdowns. I understand everybody's not comfortable with that, but that's our thesis: is that look, there's no actually escaping this, and it's just math. Like, this is not dogmatic. This is not hopium. We're not pumping anything. This is the reality of the fiscal situation. The U.S. and every sovereign nation.
We have a situation where a technological innovation in Bitcoin is introducing deflation into a money system that requires inflation in order to operate and sustain itself. These two things fundamentally are at odds. What happens in a world where assets that people valued for a long time with a monetary premium start to get repriced relative to Bitcoin? Take a look at what Hafiz Zaguri, Swan CIO, has to say on the Peter McCormick's What Bitcoin Did podcast.
I think people are driven by two different motives, right? It's fear and greed. So far, if you look at the developed countries, right, it was in terms of real estate, it was a lot of greed. People know that they put the assets there, and they know that prices are going to go up in real estate in their mind, right? It's starting to, while in places like Brazil, Argentina, Venezuela, it's more on the fear side, because we know that if it's not there, it's somewhere else, right? That's going to be debased. It doesn't matter. It leads to a lot of people going to one asset class, a $320 trillion asset class, right? We're celebrating that we just saw $1 billion going to ETFs, in one day. It's nothing. It's a drop in a massive ocean of liquidity in the world, right? And my point is that all this liquidity and it's not only real estate, you're talking about, all the way from Japanese stocks in the 80s, right? Internet stocks, then we had all kinds of different bubbles, real estate bubble, and all of that. It's because we have excess liquidity in the system that needs to go somewhere. And if you have an asset that can capture even a small percentage of this massive ocean of liquidity, even with a very small probability in your mind, and even that it doesn't happen today, it happens in 10, 20 years, that asset should be valued much more than what it is right now, right? And this is why I come to Bitcoin. I always look at the numbers and I'm like, this is by far the best asymmetric bet that you can make, because even in very low probability scenarios, if it captures the monetary premium of all these assets, right, the upside potential, we're not talking about 10x. It could be 100x in a very quick period of time if it really captures the monetary premium of these assets.
As Bitcoin continues to consolidate underneath of all-time highs, you have leveraged buyers underneath of the all-time high and above the all-time high that are continuing to get cleared out. And what you're left with is core convicted people that are interested in owning Bitcoin for the long term and not just for a short-term trade. And what does that make? Higher lows and higher highs. According to analyst Willie Woo, this seems to be like a good spot to continue consolidating into Bitcoin. So enjoy the dip while it lasts. Buckle up for a crazy week in macro, buckle up for a crazy start to March Madness, and continue to stay humble and stack sats. And with that, I'm signing off. This is Dante Cook with Swan.com. Happy stacking.